Well, hello, everybody. I'm Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Over the years, I've developed and taught a lot of our swing trading, a lot of our short-term trading courses. We really hope to teach all investors about, a lot of different aspects of trading, whether it be options or retirement or swing trading. So we've kind of broken up into different factions of the education department. So I'm happy to be in that area, teaching folks how to capture gains a little bit more quickly, and that's part of our swing trading coaching group as well, which I'm a part facilitator of. Steve Chappell and I lead a Thursday afternoon swing trading coaching group where we go through a lot of the different techniques that we teach in a lot of our different courses, and a couple I'm going to show you guys here today. So 3 picks I have today: REGN, CTLT, and SAIL. All right, and just looking at our basic analysis here, REGN undervalued, really good fundamentals. RT is a little low, 0.78, but we're going to take a look at the chart here in a moment. Earnings growth rate of 21%, good VST score. So this is really a fundamentally sound company, undervalued, good upside, safe investment. Now, CTLT and SAIL, a little bit different. CTLT is a little overvalued. Upside potential is about average, 0.98. It's a rather safe investment. You could see the earnings growth rate at 8% a year here. But SAIL is more, of a, I wouldn't say speculative, but more of an aggressive trade. It's really going to be based on the chart that we look at and, certain moving averages that we'll observe. And that's the reason why I picked that stock. But fundamentally, not that great. You could see RV less than 1, RS less than 1. It's a trade, though. It's got some pretty strong price momentum with an RT of 1.25. So let me graph them here. And just bear with me while I change our layout here. So I'm going to get rid of some of this stuff and just have price on for now. Let me get rid of the last close. And I'm going to add a few moving averages here. Okay, give me 1 second. Okay, so I'm going to add a 50-day moving average. I'm going to right-click, go to Add Moving Averages, Simple. And I'm going to add a 40. I'm going to right-click again, go to Add Moving Average, Simple. And I'm going to add another 40. And I'm going to change one of the 40s to a 50. And actually, I'm not going to take that, keep that moving average off. And I'm going to add 3 exponential moving averages. Okay, so I'm going to right-click again, go Exponential. And I'm going to select 10 3 times. So that's going to put 3 10-period exponential moving averages on my chart. Actually, it's going to put them in the field list at the bottom. And here is where I'm going to check all 3 boxes. I'm going to change one of the moving averages to a 13, the other to an 8, and the other to a 5. Okay, and I'm also going to put the RT on the bottom. So this is a technique that we will be teaching in our upcoming Mastering Moving Averages course. This is a course that Stan Heller and I will be teaching. Stan will be doing most of the core module work, and we're going to tag team together for the mastery sessions. But this is a moving average technique that Stan will be teaching. And let me just zoom in and talk about the setup. So the 3 exponential moving averages, the 5, the 8, and the 13 are really important for this setup. So what we've seen recently, I'm going to take off price actually, because we really don't need price when looking at this setup. So what we've had recently is it's called the Ema Squeeze Trade, or the Ema Squeeze trading system. Basically what we've seen here, you can see the moving averages squeezing together. Price did just barely dip below the 50-day moving average, based nicely right at this level here. Hard to say what that is unless I draw a line. Right in that level here, you could see establish a nice base there. The moving average is squeezed tighter and tighter. Now what we're seeing is price pulling away from that 50-day moving average.
Hey, JD.
Yeah.
Real quick, your MA5 is a simple.
Oh, okay.
I just want you to know that. Whether it makes a difference or not, I just wanted you to know that it's as simple.
Okay, thank you. It's hard for me to see the screen.
That's all right. You need glasses. Just admit it.
Little blurry, but there you go. There's the expansion of those moving averages and the separation. You guys see that? You could see the squeeze of the moving averages, the 5, the 8, and the 13 converging towards each other. The squeeze happened right in this area here. Price started to pull away from the 50-day moving average, 5 above the 8, 8 above the 13, and the separation being created by those moving averages. I don't even need price on right now. It's because the separation of the moving averages, price above the 50-day moving average, and RT trending higher is the setup. Now we put price on just to see where our entry is going to be. And in this case, we're going to use the close of today. Wherever the close is, I need price to go above that level tomorrow before I take the trade. But it's a really nice move away from the 50. That squeeze is important of the moving averages. What's more important is the separation that's being created by those 3 moving averages. So this leg up that's just beginning appears to have some legs to it because you can see those moving averages are strengthening, rising. And what we will use to exit the trade is the 5, and it's a really simple exit. It's a really simple trading system. The 5-period moving average crossing below both, the 5-period EMA, the 5-day EMA crossing below both the 8-day EMA and the 13-day EMA. That is your exit here with this trading system. And if you just look back historically, here was our first possible entry. Okay, let me just scroll over. Here was the squeeze. There was the consolidation after the down move. Whoops. The squeeze of the moving averages, and then make that the hard right edge. You can see the fanning. You can see the moving averages start to separate. You could see the RT trending higher. Price just recently crossed above that 50-day moving average. There's your initial entry there. So that would have been a good opportunity. Using the 5, staying above the 8 and the 13, you rode that trade for months, and there's a really nice gain there. Doesn't look like you exited. Whoops. Until this area right here, when the 5 crossed below the 8 and the 13. So I like the setup as of the hard right edge. Little resistance there, but you're getting a nice retracement off of that 50-day moving average and moving higher.
All right. So, the cool thing about this too is that everybody in this room trades a little differently. My entry, for me, for more confirmation, I know what he said and what he set up and what he's looking for to trigger. My goal, or what I would be looking for, is above that level of at least that body. That's a good level, and it's almost there. That's what I'd be looking for as an entry point, because it's sitting at a level of resistance right now. And I'd like to see it get above that level of about 48.62. But if you look back, the tape doesn't lie. That's a 6-month graph of that stock that did beautifully well, and could be giving you another opportunity to go in again. I would just be looking for that level. You can click on the horizontal. I would be just clicking on that level to get in. That's my only difference in opinion right there, is that level of resistance. Mm-hmm. Patrick?
I completely agree with what you just said. I would look for breakout of that resistance just because it's so close to it, just for a little bit more confirmation. But yeah, everything's looking pretty good. That's a
good looking trade. That really, really is. That was almost as good as my trade, Jerry. But but that really is a good looking trade. All right.
Okay. I'm sorry. RGEN. I typed in the wrong symbol.
Oh, that was me. Okay, all right. Okay. That was my fault, probably.
That's okay. Okay. All right. So let's see. Same setup, same type of trading system. So as far as I can see, the 5-day EMA, the 8, the 13. So I'm going to squeeze over to the hard right edge. I'm sorry. Hold on. Change my layout here.
All right,
Okay.
Jerry, while you're setting that up, let me take this
Yep.
question real quick.
Sure.
Barclay says, so fundamentals do not matter with this system. Do you still wait for the stock to climb higher than yesterday high before you buy it? So Barclay, I set the stage about that earlier when we first started. This is more, these moving average setups is more of a trading technique. So yeah, we look at a little bit of fundamental analysis, but notice that all of these trades are based off of moving averages. That's the whole purpose, and that is more of a technical type of a situation. So I wanted to answer that question. All right, Jerry, go ahead.
Okay, so here's RGEN. So what we're looking at is the 50-day moving average in green, the 150 in pink there, and stochastics down at the bottom. So with this setup, we look for a trending stock. So price needs to be above the 50 needs to be above the 150. If I take off price, another really important aspect here is that we want those moving averages to be separating. So we're looking at the hard right edge. This is the current time. You see the separation between those two moving averages. That's very important, indicating a strengthening trend, even though price has recently pulled back from a new high. So this is a dip buying system. We look for price to pull back towards the 50. We look for it to stay above the 50, and stochastics is our short-term entry indicator. When it goes from below 20 to above 20, that's our entry. And you can see it just recently crossed from below 20 to above 20. Could have got in maybe yesterday or even today with the crossover, but a nice retracement back towards the 50. You can see, do I see a bullish candlestick pattern? That is a bullish harami,
Yep.
which is a reversal pattern right at the 50. Nice follow through the next day. So this is a really good trade, picking up the dip. Just a couple of days off of the bottom. And let me just see when stochastics crossed. I can't read those numbers. What
I'm checking.
percent
Right there,
is?
they're both below 20.
What about today? What about that day?
Then the K is above 20. So yeah.
Okay, perfect. So yesterday was your setup and today was your entry. And as long as price went above yesterday's high, which it did today, that indicated an entry for this trade today. You're not too late. You're just getting started here with a nice retracement off of the 50-day.
I got a question. With the trade set up the way that it is, and as quickly as it gets to oversold territory, would you use the high as a profit target, or if you got in now?
Yes, absolutely. Sure. The most recent swing high would be where I would put my initial profit target. So
Excellent.
Well, a lot of what we've been doing in our Thursday coaching groups when we're trading these types of systems is using that most recent swing high, but taking half off. Literally sell half of your shares and leave the rest to run, and then use, if let's say price doesn't move much farther or at all above that most recent swing high, using either the previous day's low or recognizing a bearish candlestick reversal pattern. Maybe if price gets to that high, you might see stochastics enter into the overbought situation,
right,
and a bearish candlestick formation after taking half off. I'm going to take half off once it hits that most recent high.
Yeah.
Then I'm going to let the rest run, and then I'll use, some of those money management tactics again, like using previous day's low or bearish candlestick reversal patterns to manage the other half of the position.
All right. Before I bring Patrick in, another question. 500 SJF. To enter or exit, best chart time frame, 1 month, 5 day, 1 day, 1 hour. It all depends on your goal. If I'm day trading, I will look at 1 to 5 minute bars. If I'm trying to swing trade, I personally like to look at 3 month graphs. And the reason why is what happens every 3 months with a stock? Earnings. What's the biggest mover of a price of a stock? Earnings. So when I look at a 3 month graph, I know that earnings is somewhere in that 3 month view and should give me a better representation of what I'm looking at. And so I prefer a 3 month graph from a swing trade. If I'm a longer term investor, I'm going to look at a 1 to 3. If I'm longer term retirement, I'm going to look at a 1 to 3. year. So it all depends on what your goals are at the time of looking at the trade and what your goals are. All right, so that's to answer your question. Patrick, I need your input, buddy.
I like it. I like the fact that it's breaking that short-term downtrend. If you drew a trend line, yeah, it's going to be a steep one, but you're clearly breaking out of that. I like stochastics. Stochastics has been one of my favorite technical indicators to use for years now. I like the setup. The fact that it's above the 50 and the 150 just adds, icing to the cake there.
There you go.
Yeah, so you're looking at those two moving averages and determining intermediate term uptrend and long-term uptrend. The stochastics going below 20 is your short-term pullback entry. That's kind of the signal that you're gonna use to pinpoint an entry. But the 50 and the 150 just serves as analysis. So above the 50, intermediate term uptrend, above the 150, long-term uptrend, and we're trying to buy the pullbacks. If price was below the 50 or below the 150 and I got a stochastics crossover, that's not a setup. You really want to look for a long-term uptrend, in the midst or just ending a short-term correction.
I want all of the new people out there to understand Jerry just showed two different techniques that he teaches. That's two different techniques that he just showed you. And something tells me that on his third stock, he might just show you a third different technique. I'm just guessing. I don't know for sure, but he did just show you two different techniques. All right. So, Jerry, don't let me down. Please show me a third technique.
You would be wrong.
Okay.
It's a similar here
Okay.
that I just showed you. So there's the separation between the two moving averages. We have the 50 and the 150. So this is the same setup, same trade that we just showed there. So if we look back here, there's your pullback towards the 50 above the 150. There's your stochastics crossing from below 20 to above 20. Right in this area here is your entry. I think if I pull this back a little further, right in this area here. So there's your pullback. So this was an emerging trend, right? This is in the beginning stages of this really nice run that the stock has been on for quite some time. So here we had a pullback towards the 50. We had it kiss the 50-day. The moving averages started to separate. That's when stochastics went from below 20 to above 20. So right in this area is where you would enter. And I would have stayed in this trade because price never closed below and never really fell below that 50-day moving average, which, is my exit criteria here. Either price closing below the 50-day moving average or the most recent swing high. So today's high, so we're actually seeing a little retest of that 50, right? So here was the kiss of the 50, little rally there off of the 50, and then over the last couple of days, a little pullback, a little retest of the 50-day moving average. Today's high, whatever price that is, if I just put my date line here, 96.81, that's my confirmation level for tomorrow. Price goes above 96.81. My initial profit target, I'm not going to be greedy and say all the way up here, right? I'm going to kind of split the difference here between these highs, maybe put it somewhere in this area here. Can't really read what price that is, but right in that area would be my initial profit objective. Price reaches that level, I'll take half off and use the same money management tactics that I went through earlier. Stochastics goes above 80. If you're so fortunate, right? If you enter into a position when stochastics first crosses from below 20 to above 20, and then you're in it and it crosses and it reaches 80, you got a nice profit on your hands, and you want to protect those gains. You want to look at candlestick reversal patterns to help you identify when to exit the rest of the position. So that level there would be where my initial profit objective would be. And if ever, anytime I'm in the trade, price goes below that 50-day moving average, that is also kind of my line in the sand there as well.
Hey, Jerry.
Yeah.
Can you tell your settings for the stochastics? I see a lot of people questioning about it, and
Sure.
The image of you is blocking where that box would typically show.
Oh, okay. That's right. Yeah. So it's
okay.
a 14.3 slow stochastics. Those are just industry standards. So 14.3 slow stochastics. Thank you, Patrick.
Okay. I don't know what I lost it. I like the whole setup of the 50 and the 150. Those are your two moving averages. I like that idea. The medium term, the long term. And as the stock is pulling back, this gives you the opportunity. How many people have sat out here and said, man, I wish I could have bought when the stock was down this low and go back up? I like the setup to get you into a stock that's exhibiting a pullback right now. If you look at the 3-month graph, 4-month graph, the stock's price is still slightly higher than it was 4 months ago. So the stock is still trending higher, even though it's got a little bit of a pullback. But using stochastics and using those two moving averages together, this is another stock you put in your watch list, getting ready to rock and roll with. Patrick?
I like the setup, but at the same time, every time I've ever seen or traded a stock that has that big red candle in the last month or so, I've never had great success with it. So that's kind of always been a red flag for me seeing that. And the fact that Stochastics, I know we're waiting to see it cross above, but I've seen it, just ride below that oversold territory for a while. So I'd be a little skeptical. If I did take a trade like this, I would be extremely cautious and keep some really tight stops on it.
Yep. Yep. So that 50-day is going to really protect you against further downside here. If you are a little concerned with recent price action, but that 50-day is going to be a nice floor for you.
And for everyone from a trade perspective, and I think that Patrick and Jerry can both agree with me, the biggest thing you want to prevent against is letting a loser become a big loser. That 50-day moving average really reins in your ability to stop the bleeding quick. All right, especially from a trade perspective. You guys agree with that?
Absolutely. Absolutely.
Well,
yeah.
I'm about to say, you could not just shake your head. You can say something, Patrick. Holy smokes.
Well, I think that's important to say, because with all of the trading systems, most of the trading systems that will ever teach you, any technical analysis system, it has all that built in. Where do you exit? Where do you enter? Where do you take profits? I know a lot of you traders out there have a hard time with that.
Yeah.
So all of the systems that we teach you in Trade Like a Pro and all of our other courses have pre-built. Okay, here's where you enter. Here's your confirmation level. If you're wrong, here's where you exit. Here's where you look to take profits. It kind of covers all your bases. So I'm not going to say you're not going to, because you can ignore the stop and just let the stock ride, right? And because you think it's going to continue to move higher, but at least you have that there to follow as a nice guide, where to exit.
And Patrick, thank you for answering some of these questions in here about what's going on. I still need to reiterate, this session of this hot stock panel is more for trading. Just in the name itself, with moving average setups, that should have told you that this was more of a trading hot stocks panel this month, specifically. And everything that we are showing is more from that perspective. Questions are coming up about how to run searches using those technical indicators. Yes, you have to have ProTrader in order to run those searches. But if you want to look at the technical indicators on a graph, you can do that without having ProTrader. All right, so if you want these searches, or the ability for Jerry to find a search like a stock like that, or for Patrick to go look and run a search like Star Search to find his stocks, or me building a search using a 3 and 8 exponential moving average crossover to find my stocks, all of those, you need to have ProTrader to do so. Yes, you do. And BM was hot over something, and I still don't know what it was hot over. Whatever it was, he was hot over it. But whatever. So anyway, I love helping everybody, but if you come, Joey's trying to keep me from taking all this stuff personally. I'm trying to keep it because I love the content that we give out, and I want to make sure that we get it across to you. Don't be afraid to ask your questions. We are doing the best that we can to answer as many of them as we possibly can. All right, Jerry, was that your last stock, or do you have another one?
I'm sorry? No, that was it.
That was it. All right, so just to let you know, the winner of the mug is Deborah Mitchell. Deborah, if you're here, type something in the room. Say hi, say something, I don't care. Just say something. Oh, and do you need to email marketing@vectorvest.com? All right, let's see. Deborah, you here? Don't stress Glenn. We love all you guys. Thank you, Ebert. Deborah, you're here. All right, so Deborah, you need to send an email to marketing@vectorvest.com. Boston says, folks have procedures at work job that are written and need to be followed. VectorVest folks teach you how to have these procedures like your profession. The more you follow procedures, the more success. You know something? I like that statement because I think that, you know what Jerry showed? In those paid courses that he teaches, he puts together a plan. Right, Jerry?
Yep.
He shows you what a setup looks like. He shows you how to find the stocks. He shows you how to set up, how to trigger, how to get out. All of this is a trading plan. Patrick is part of our jockey club. We have, to a certain degree, a trading plan. Looking at from our automated trading systems, we have a market timing call, we have a search that we use, we have stops that we use. Whether you're investing or you're trading, everybody in this room needs to have a trading plan. So as Boston says that, written procedures, I look at it more as a trading plan, and everybody in this room needs to have one. And whether you're looking at moving average crossovers, you got to know what you're looking for. Where's your setup? Where's your trigger? How you going to get out? You know what that's called? When to buy, what to buy, when to sell. And that's a trading plan. All right, so that's what I wanted to say. Hey, can you put all three of us back up on the screen again?
Yeah, doesn't Jerry supposed to do something?
Oh, Jerry, well, you're going to talk about your course? You do that.
Yes.
Do that real quick.
That's right. So the Ema Squeeze Trading system that I showed you guys earlier is part of a new course that Stan Heller and I are delivering here. Stan will be doing most of the work, but Stan, by the way, is a consultant for VectorVest Canada. For those of you guys that live in Canada, I'm sure know Stan very well. But this is a moving average course. It's obviously strictly dealing with moving average trading systems, but similar to the EMA system, the trading systems that we teach you have very clear entry, exit rules, and not only exit at a loss, but where to take profits. So if you go to www.vectorvest.com/MA, I'm sure one of the guys will type that in the chat box there.
Do you see the screen on your screen?
Yes.
Okay.
Yep. So we are currently delivering that course. Our first live mastery session is tomorrow at, I believe, 2 p.m. Eastern time. I believe it is. It's sometime tomorrow. Audrey says, Jerry, I'll be in that class to hassle you both. Need a refresher. Good, Audrey. It's been a long time. Yeah. So again, guys, www.vectorvest.com/MA to register.
Are you still kicking yourself for not getting out of the market soon enough this year, only to miss getting back in and making big profits? That all stops today when you sign up for VectorVest, risk-free for 99 cents. That's right, folks, 99 cents for 30 days. Stop missing out on market opportunities and try VectorVest today, risk-free.